You're listening to the Wealth Mindset Show, where Hicks and Zerker Capital Management's team of finance professionals, portfolio managers, and a life coach come together to tackle complex topics in finance and retirement planning so you don't have to. From investment strategies and wealth management to tax planning, retirement income, and aligning your money with your values and purpose, the Wealth Mindset Show offers the tools to thrive.
All right. Hey. Welcome to the Wealth Mindset Show, where our Hicks and Zerker team dives into conversations on managing wealth, navigating retirement, and making smart decisions for a secure, meaningful future. I'm Austin Wilson, Director of Investments at Hicks and Zerker Capital Management.
I'm Josh Robb, Director of Wealth Management at Hicks and Zerker Capital Management. And today joining us is Chase Rose, Associate Wealth Advisor at our firm.
My favorite Associate Wealth Advisor.
The only.
Oh, careful.
The only.
The only.
I wasn't going to say that.
Yeah, but this is a timeless episode. Someone's going to be listening later.
True.
And someone's going, hey, wait a minute.
So thanks for being here, Chase.
Thank you.
You're a notable real estate. We're talking about real estate today. You live in a house.
I do.
So real estate investor you are.
You live in a house.
What's new in
criteria.
Chase's world? Nothing at all?
Nothing too big.
Oh, okay, good.
Just normal stuff. Got married last
What?
weekend.
Yes.
Yeah.
Hey, ladies, Chase is off the market.
I talked about my bachelor party scare a couple weeks ago.
I know.
Oh,
Almost
yes.
drowned.
I know.
Yes, almost drowned.
But luckily we made it to wedding day. So
No almost drowning incidents. In the,
That's right. Yeah, you were at
You're by the lake, so.
yeah.
There's a lot of risk there.
There was, yeah. But we got to the wedding day, so now my wife doesn't care if I die now because she's on the life insurance.
There you
That's
go.
right.
Everybody's good.
stuff. So
Well,
yeah, we're good.
your wife looked beautiful, and you cleaned up all right yourself.
Well, I appreciate that. Thank you very much.
Josh, what's new with you?
Oh, man, not a lot. Just spending a lot of time on baseball and softball fields. Kids are playing sports, and I have a pair of old tennis shoes because there's no getting that ongoing dirt and dust out of
They're
those
stained
things.
white New Balances, grass stains.
Yes. They're mowing shoes. They're actually my mowing shoes. Is what I use. But no, it's fun. It's a good time being out there coaching the kids. So, yeah. What about you?
Yeah, I just got back a week or so ago from my annual motorcycle trip with the guys in my family. So my uncle and my cousin come up from Florida, and my dad and I go down from Ohio and meet somewhere in the middle.
Okay.
This year was Blairsville, Georgia.
That's not middle.
It's the middle of between. It actually
Is it closer?
You think it's not.
Florida's big. Yeah.
Florida's big. Georgia's huge.
Mm-hmm.
So it's like 8 hours for them and 8 hours for us.
Okay.
So it wasn't so bad, but we had a good 4-day trip. And it was the first year that we trailered the bikes down instead of riding them down, and not riding on the highway all day is great.
Yeah.
So
sitting in a nice air-conditioned truck.
Listen to a podcast, maybe, the Wealth Mindset Show.
That'd be a good one.
That'd be a good one. So yeah, it was a good trip. Everything's good. And yeah, we're gearing up for summer with 3 little girls here. So as I mentioned earlier, real estate.
Real estate.
Yeah.
We're talking about something that's everywhere. I think it's on every social media ad in the world. Mm-hmm. Everyone's talking about it. Real estate investing. And, everyone seems to know some person online who's made a fortune flipping houses or having rental properties. So the question is...
And we're talking about physically owning real estate.
Physically.
Because there are other ways to own real estate.
Yes.
So there's investment vehicles you can have, stocks, ETFs, mutual funds that trade in real estate. But we're actually focused on physically owning, you being the owner of the property. All right, sorry to interrupt.
Yeah, so the question is, should you invest in real estate?
Yes.
How much should you invest in real estate? Should they be part of your investment portfolio overall? And I think that there's a lot of nuance to this, right? It's not a black and white answer.
Right.
Because the answer probably is...
It depends.
Oh, shocked.
Good answer.
Josh would say it depends.
Yes.
But it's true. Like, there's a lot of things that people, need to consider when they're looking into this. So let's just get our minds around why real estate can be appealing. So what are some thoughts on why real estate can be appealing?
Well, there's the old adage where, you have a comfort holding tangible assets, right? And we have a lot of people who express that, when you're holding stocks, and especially nowadays when you don't have the physical stock certificates.
All digital.
You're seeing the screens, you're seeing the stock market fluctuations on a daily basis. That can bring a lot of people a lot of discomfort, right? And so just having a tangible asset, whether it's fluctuating in value or not, and you're not seeing it on a daily basis. So that can bring a lot of comfort for people. And also, I feel like this is an old school way of thinking, and it's not a bad way of thinking by all means. A lot of people have been, successful real estate investors in their lifetime. But just having something real that someone else is not holding on your behalf also brings some comfort as well.
Yeah.
Like if, you're a custodian or whatever were to go out of business, you might have some insurance on some holdings there, but there's no guarantee you're going to get all your investments back. So that's definitely one reason.
So it's like a bird in the hand is worth two in the bush.
And you think real estate's an example. Gold, precious metals. Those are the things somebody says, hey, I could touch it. I could feel it. I see what it is that I have, like you're saying. Right.
Absolutely.
And then, another one is the control factor on if I own the real estate, and let's take like a home, for instance, I can make improvements to increase its value. Yeah. So I am not reliant on a company hopefully doing the right thing to increase value, but I can impact the value by things I do for it, which is always nice.
Yeah. I guess another way that people like real estate is just because it's always gone up and to the right? Stocks go up and down, but
if you forget 08, 09, yes, it always goes up.
That's the joke, right? It doesn't always work out that way.
Yes, but it's thought of that way.
In people's minds, it's like, oh, you can never lose money on real estate.
Yeah.
It always appreciates, and that's not always the case. Another thing is how you can finance it. You have a lot of financing flexibility with real estate because it's a asset-backed product, right? So you can borrow against your other assets and continue to leverage yourself and not necessarily have to put as much. Like if you buy stocks, you can. We're not going to talk about margin. You could
borrow a little bit,
but not near as much to the extent that you can with real estate. So I think there's a lot of financing power, but that also brings a lot of risk with it as well because you got to pay the piper. So I guess something that is a myth is that real estate is passive income.
Yes.
And I guess in the most simple sense, it kind of is. If you never do anything,
it can be.
It can be if you just sit on your house and collect a check. But the reality is that there are ongoing costs associated with it. There is a lot of management that goes on with these houses in terms of keeping tenants in them, fixing things, paying property taxes and insurance and all this stuff that makes it not so passive. So what are your guys' thoughts on that being, true or not?
And that's a great point. If you truly want a passive investment in real estate, if that's what your goal is, you're going to have to pay for it, right? In the form of hiring some property managers or something of that sort.
It really eats away at your margin.
Exactly, right? And that, you took the words right out of my mouth. It really takes most of the profit out of it. And then if you're not paying someone to do all that for you, you're stuck, answering the call at midnight, like, hey, my toilet just broke, or hey,
no one wants to do that.
The furnace went out. That's a terrible call to wake up to.
And along with that, we've had a handful of clients that have done real estate, and I can think of two. One who didn't want to do a lot of work, so they hired a property manager, and they didn't have a lot of passive income, but their long-term goal was appreciation and then selling and collecting the growth there.
Yeah.
And then there was another one who was handy and was able to do it, and so they collected more passive income. So two different approaches, both using the same investment, which was real estate, but two different approaches and had two different outcomes.
Well, I think it's really like, do you want to pay in terms of your time, or do you want to pay in terms of someone else, in terms of dollars, paying someone else to do it? Like, it is going to take a lot of your time and effort to manage these properties, or it's going to take a lot of someone else's, and you're going to pay them to do it.
Yes.
You're going to accomplish the same thing when you look at it. So I think it just depends on how much maybe you're retired.
Yeah.
Maybe you have the time or the desire to be doing those things, and it may be not as bad, but if you're young and have a family and trying to manage 5 rentals, like that can be...
It could be a lot of time.
Or maybe, I know people out there who are strictly just rental property investors, right? So they buy a rental property. They don't have a full-time job outside of that.
That's their job.
And so you have the time to answer the calls and manage all your properties and things of that nature, assuming you know how to fix, all the issues that come up. But for most people, there are a lot of 9-to-5ers out there. You don't always have the time available to do that.
I know no one wants me rewiring their house. So, if I was going to go that route, there would need to be some help there.
I think it's another thing to think about is, so we're talking particularly about buying houses, buying properties physically. But if you go into the public market and buy like a real estate investment trust, that's the way that publicly traded real estate is structured from a tax perspective, very favorably treated tax perspective. It's even risky, right?
Yeah.
So while if your house, your price does not fluctuate every day, or a rental property house does not fluctuate every day, it's a lot smoother ride in terms of that. Real estate, publicly traded, does. And that is something that is also really good to keep your eye on. It's not risk-free, and it's not even completely passive in terms of, there's a lot of risk there as well.
Yeah. And another thing to keep in mind, we talk about the illiquidity of real estate, right? If you can put your money into a real estate property and you really can't get it back out unless, one, you do an equity loan, which you're going to pay interest on, or two, you sell that property.
Right.
And for you to sell the property, you have to have a buyer on the other side. So that can be an issue if you're wanting to get a good price out of it,
May not be
sometimes you
quick.
have to wait. Exactly. But
Yep.
the same can be said for real estate investment trusts. We've had clients who have been in a REIT, is what we refer to them as, and you can't get out of that REIT for years.
Some of them, yeah.
Exactly. And some
Mhm.
of them have very narrow windows in which you can liquidate if there's a buyer on the other side.
Yeah.
And so even if like some people would say, I don't even want the money. I just want to be out of it, or just give me pennies on the dollar for what
Right.
it's worth. But still, that's not always the case. You can always just get out of it. So
the real question is, how does real estate fit, or might it fit into your financial picture overall? And
Yep.
I think it's not about being able to buy it, because I think most people have the ability to buy some if they want to.
Yeah.
Especially, again, there's a lot of financing options when it comes to real estate,
Mhm.
but it can be a portion of an overall financial picture. You can look at your stocks and your bonds and your cash and your own personal home, and then some real estate investments on the side, and it can add up, right?
Mhm.
It can be a needle that can move your financial picture. But the question is, how much maybe should I have real estate as a portion of my assets?
And, I always think the first real estate most people buy is their own home, right?
Mhm.
Which most people don't look at that as a real estate investment.
Right.
They think it as, I need a place to live and I'm going to own it instead of rent it. But that is a real estate property that you own, and you could at some point sell it and either move or do something else. But that's usually everybody's first step into real estate investing is, I need a place to live. Oh, I'm going to buy one. Right. And so for a lot of people, they don't think about it as, how does this fit in my financial picture?
Yeah.
It's not seen as
Right.
that investment piece. But then when they're moving outside of that, whether they own their own home or not, when they're thinking of it in the terms of an investment, that's kind of what we're talking about here.
Mhm.
Because there's different calculations when we're talking financial planning for affordability of your home
Yep.
when it comes to costs and expenses. Whereas in this case, most of the time when you're looking at real estate as an investment, you're expecting to collect income at least to help offset some costs versus I'm living there and I'll have ongoing costs. So
yep.
think about that as we're talking through this. But the first thing is you got to be very careful about understanding how much and where that fits in your big picture. When we talk about financial planning, when we're sitting down with people, it's that long-term plan on where you're trying to go, what are you trying to do with your hard-earned assets, and how much of it should be put in this one style of investing.
Mhm.
It's not an and or, it's usually a both if you're doing it. And so we say, just be very careful about not getting too focused on one thing because it's worked in the past.
Yeah.
Right. Same is true with any stock as well, is don't say, oh, this is the only way because it's worked.
Yeah.
Well, there's ebbs and flows in the market.
Yeah.
I would say that in a lot of instances, real estate and other asset classes can complement each other well.
Yes.
If you look at how things track each other, that's called correlation, right?
Mhm.
When stocks are up and bonds are down, you often get that negative correlation. Well, real estate often has much even less correlated than that. It can kind of move sideways and kind of do its own thing as opposed to the other traditional asset classes. And I think that that's where the appeal is to a lot of people is I can have maybe, if you look at all my financial picture, a little bit smoother ride because I have some real estate in there. I just think that it's one of those things where if you're going to invest in real estate, it's really hard to look at it as a single investment because if you put all your eggs in one real estate investment and that one, has issues with tenants paying or big major repairs you don't have the money to fix and all this stuff, that can really hurt you. But if you're spread out across multiple, which again, you've got to have a lot of assets to have a lot of assets, right? That's where I think you may get some of the opportunity. But starting out, I think it's very hard to see how you can be properly diversified. So I think just overall, when you're thinking about, hey, this could be good for me, think about capping your investment. That there's no hard limit, but keeping it a reasonable and I would say ultimately relatively small to start, especially part of your overall plan.
Which is hard when you're young because buying a single property may be a big chunk of your overall net worth, but the goal is that you're growing and appreciating the other ones. Don't focus solely on the one.
Right.
But overall, don't find one big property and sink everything you have into that because like you said, that could be a risk. It's the same as buying one company in your investments and hoping that one works out. You're taking a lot of extra risk outside of just the normal stock market risk by focusing in on one. And I think real estate does that.
And I think liquidity is just another thing to keep in mind. Like real estate, not super liquid. Again, it takes time to sell things.
You can't sell a corner of your house when you need it.
And you can't sell a kitchen to pay a bill that if you need to go to the hospital.
Yeah.
So that's one way that you could be viewed as, oh, I'm asset rich. I've got $1 million of real estate. but I can't float the bill that I just got from the hospital from breaking my hand. So that's a really tough place that I think a lot of people could get stuck in.
And I've seen it with some clients, and it's hard because then they're forced to maybe sell one of those properties, which then reduces that income.
Right.
But it kind of gets this very tough place to be in. So
you never want to be in a position where you have to sell something.
Yeah.
When you have to sell something, you're probably going to take a less than ideal price.
Yeah.
And that's not good.
Have you ever felt overwhelmed by the complexities of managing your wealth? At Hicks & Zerker Capital Management, we specialize in helping affluent families and individuals navigate the complex challenges of managing their finances. Wealth management is all about combining thoughtful financial planning with active investment management to help you reach your goals. Our process is designed to guide you toward what truly matters because we believe wealth isn't the destination. Achieving your dreams requires careful planning, smart decision-making, and access to high-quality investments. That's where we come in. We understand that complex financial situations call for deep expertise in investing, tax strategies, and retirement planning. But our approach goes beyond that. We integrate your financial goals with your core values, helping you visualize the possibilities your wealth can create for a secure future. If you're ready to take the next step, visit hzcapital.com/start to see if we'd fit into your needs and to schedule a call. Again, that's hzcapital.com/start.
So let's talk about how real estate fits into retirement. So that's a little bit different. We're moving down the road and now we're retired. Real estate may have made more sense when we're younger because, we maybe had the ability to do more of the work or all this stuff. But what about once you're already in retirement? So what are your guys' thoughts, Chase, on that?
Yeah. So my thoughts initially, whenever we, are working with a client who has a real estate portfolio, we oftentimes, as opposed to showing that as an asset, we'll show it more as a cash flow. And as opportunities to either buy or sell or rise, we'll adjust as needed. But that's the nice thing about being diversified. You have your stock portfolio, you have your bond portfolio to kind of get that negative correlation that you need from a diversified standpoint. But it's nice to have real estate because you can enter that as a steady cash flow. You can inflate it if you expect to raise your rents over every few years or so. But what we've seen, and I'm sure, Josh, because you've built a million retirement plans yourself, when you have a strong cash flow in a retirement plan, it makes a big difference.
Oh, yeah. Yep. Even if you don't ever plan on selling those,
exactly.
Don't count it as a large inflow at the back end. Yeah, just having cash flow is nice.
Yep. And you don't have that standard deviation, right? You're not selling at lows or selling at highs. You just have that consistent cash flow. It's a lot like a stock that pays a great dividend, right? So definitely it's a positive from a retirement planning standpoint, assuming that you'll always have someone there to pay that rent, and assuming that you're not paying bills out the wazoo just on upkeep and things like that. So.
And that's just in general terms, what I've seen more often than not is that the older someone gets in retirement, the less passion they have of maintaining and managing. Mm-hmm. So when it talks about young versus old, that's all relative. It's more just, it is time consuming. It takes energy. Even if you're not the one doing it, managing it still takes time. And so I do think the farther people get into retirement, the more likely they are to start liquidating or passing some of that off.
Totally.
Yeah. And another thing to keep in mind that I'll sorry for cutting you off. A lot of times people talk about not making yourself house poor when you buy your own personal property to live in. But it's also really important. You don't want to be cash poor on a rental property because oftentimes, unless you have already saved up some assets to purchase outright this property, oftentimes people are financing.
Oh, yeah.
Especially where rates are at today, you're not guaranteed to get someone to pay a rent that's higher than what your mortgage cost is going to be, right? So you might find yourself in a situation where if you're going to get into rental property investing, you might have to be paying more in a mortgage than what you might get in return. That's not always the case. It's just, a thought I have in my brain, but you want to make sure that's the right investment for you. Don't just go buy an asset and then figure it out later. That might not work out well. You want to make sure that you can cash flow whatever your mortgage payment is, and plus and then some, because you're going to have costs that come up and things like that.
And this is where you could consider making a change to a different form of income stream in retirement. If that's stressful, because, I've got the illiquidity stress, I've got tenant stress, I've got house repair stress. Like, the last thing you want is all those different levels of stress in retirement. So maybe you could start saying, well, maybe I could downsize my rental portfolio, sell off some properties. Now, we're going to get to
taxes
and
Yep.
stuff here soon. But that could offer give you the option to say, hey, I can transition this lump sum of money I now have into something that is just generating cash. Fixed income's a great option for this for retirees. You can even do, income generating equities. And there's all kinds of ways to do that may take some of the stress off. You may have a little bit more stress from a market perspective, but you may have less stress from actually managing it, right? So that's going to bring us to some common mistakes that a lot of people miss when they're thinking about rental properties. And I think this is something that it can bite you in the butt if you wait too late, right?
Yeah.
So let's talk about the elephant in the room, and that's taxes.
Yep.
And there can be some major surprises. So guys, talk a little bit about the tax implications there.
First and foremost, you're going to pay property taxes.
Yep.
Right?
Oh yeah.
There's no property tax on holding Apple stock or Microsoft
Correct.
stock, right? That's definitely one negative side to real estate investing. But also, one of the tax loopholes that a lot of real estate investors talk about is the 1031 exchange. I believe that's what it's referred to. You depreciate the asset, you save a lot on taxes, you roll that property, you sell it, and roll it into the next one. So it's
got to be a like
exactly
investment.
a like investment. So you're not paying the gains on that. But at some point, once you liquidate that investment down the road, you're going to have something that's known as depreciation recapture.
Correct.
And what a lot of people don't know, and what a lot of people miss, is the tax rate that you're going to pay on that recapture of depreciation is oftentimes higher than the tax rate you most likely would have paid by just realizing the gain when you sold the property. I believe it's 25% is the recapture rate whenever you do finally sell the property. So that is something where if you spend years investing in real estate and you go from one property to the next, once you look to get out, that can really come and bite you in the butt. So
yeah, and then along the way, you're collecting income, which is taxed, your rental income or whatever. That's taxed along the way. And then you got insurance costs, all the other things you got to do. So, again, you got to factor that in when you're looking at that break even and saying, oh, I'm buying this property for X and I can charge Y for all my renters. Make sure that covers all of what you need, because in the end, the last thing you want is to be short and having to find cash somewhere else just to supplement this investment that you thought was going to be making you money.
So as it relates to estate planning, let's talk about how this can play out. So suppose that I have a portfolio of 20 rental properties and it's worth $1 million and I have 3 kids. I die. What happens to my properties? How do my kids get their money? How's that work?
Yep. And it depends on how you structure it. I mean, are these within some sort of corporation or LLC or entity as it's its own unit, or are they each owned individually? Those things matter, and because you can give each one to a different kid, and they would each have that one. Let's say they really want to live on this house or whatever. But in general, most of the time, what you see is the kids may not be as passionate about investing in real estate as you were, and they just end up selling them all. So then a question is, were they good at selling it? Did they time it right? All those things. So sometimes you're better off if you're late stages starting your own liquidation of your assets when it comes to real estate, because you know their value. You're probably more in tune with it, and then giving them the cash as an inheritance. They do get some step ups and things like that, but in general, most investments do. So it's not like there's an advantage one way or another. But most of the time you see liquidation of those assets by the next generation who really doesn't care.
Yeah,
they just want the cash.
This is the financial advisor disclaimer in me speaking, but this is where it really pays to have a great attorney. Right? It's not just an attorney that can draft documents, but someone who knows this industry or this investment realm and really knows what they're doing. I mean, you can save a lot of money in its taxes.
Well, and I think that this is an area where experts in general are important, because another area is knowing someone who knows the real estate in your area can be a great asset if you want to invest in it, because not every geography in America is the same. And there are certain geographies where you can get more rent than your mortgage is going to cost, and your spread's going to be better. So the economics work way better to be a rental owner. But there are others where it's the other way around, where rents just are kind of low, and it's not a great opportunity to be buying rentals, because you'd actually probably be underwater on some of that unless you're completely banking on appreciation, and that's not a good thing to bank on. So I think that that's something to keep in mind. Another is just not to be emotionally invested. Maybe you got handed some real estate. It was your grandparents' house or your parents' house or whatever. Just because it was theirs doesn't mean it was a great investment to begin with. Maybe it worked for them as a primary residence, but that doesn't mean that you holding on to it to rent out, the math's going to math, right?
Yeah, the sentimental value of that sometimes.
That doesn't mean it's a good investment. So I guess at the end of the day, treat it like a business. If you're looking at, doing rentals, look at the numbers. If the numbers don't work out, don't do it.
Yep.
And that's okay.
And I'm sure there are a lot of great resources out there you can find online.
TikTok,
TikTok.
Yeah,
is a
exactly.
great
That's where I get all my financial
a lot of reliable information on there. But I mean, there's no short, like, real estate investing is a very hot topic right now. I'm sure there's calculators and, estimators and all that kind of stuff that you can find online. Just use your resources, find someone who knows what they're talking about. It definitely would go a long way.
Okay.
Josh, what are some closing thoughts, key takeaways?
Yes. The biggest one is real estate is just another way of investing.
Yeah.
So it's not like this magic silver bullet that solves all these things and always works for everybody, but understand it before you get into it. Have a plan and make sure it fits within your bigger financial plan.
Right.
That's the first one. And then the second one is make sure you understand the risks. All right. Because you're going to hear people talking and they're going to say, hey, look at how well it was for me. They may have been in a different situation than you, or even the markets may have been in a different spot than they are now. So don't just rely on what somebody else did to be successful and think it'll automatically work for you.
Yeah, that's a point I want to make. I feel like a lot of the things we've mentioned in this episode are very cautious or beware of X, Y, Z. Real estate investing is a great tool that you can use, as you mentioned, to invest for long-term return. But I feel like it's a really hot topic. There's a lot of people out there on social media and things like that saying, oh, you should be a real estate investor because this, and this. Not everyone is going to have the same result, right? Because each real estate investment is different. It's not as efficient of a market as the stock market is, right? The stock market is a very efficient market. It's always very efficiently priced. Real estate's a lot different, right? You can have opportunities somewhere, or you could be paying way more than you should be for a property. It's a great tool, but we're focused more on why it's not always the best fit for everyone and how it can be a good fit for people. So
I would just say that I would view real estate as a complement, not a supplement for traditional assets, right?
There you go.
It can fit your picture. It can enhance your, return profile over time and your cash flows over time if done properly. But it is not a replacement for stocks and bonds. That's the way I would see it. All right. Well, thank you for listening this episode. If this conversation gave you some clarity on the whole real estate investment thing or sparked some more questions, don't forget to subscribe to the Wealth Mindset Show on your favorite podcast platform so you don't miss any episodes. There's also more at thewealthmindsetshow.com. And you can always check out our website at hzcapital.com. And follow us on social media. We're pretty active on there, and we'd love to catch up with you there. And thanks for listening.
Yep,
We'll talk to you soon.
later.
Bye.
Thank you for joining us at the Wealth Mindset Show, where we tackle the complexities of finance and life planning to help you align your wealth with your values. We hope today's conversation provided value and clarity as you navigate your financial journey. Your hosts work for Hickson Zerker Capital Management, and all opinions expressed by them or any podcast guest are solely their own and do not reflect the opinions of Hickson Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hickson Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment, and any investor attempting to mimic index performance would incur fees and expenses that could reduce returns. Securities investing involves risks, including the potential loss of principal, and there is no assurance that any investment plan or strategy will be successful.